Great and beautiful morning, afternoon, and evening to you all, wherever you are joining me at this moment. Welcome to 229th edition of Investdata Trading Academy live with Ambrose. Yes, the market, as we speak, is extending the mid-trend we saw yesterday, and this has become a global phenomenon. If I tell you that nearly all the markets are mixed, but the good thing is that some of these markets also are gathering momentum to look up, in the upward direction, that means northward move direction. But the good thing is that the perception, which I will tell you that is very, very key when investing. Sentiment, perception, and investor reaction to either policy statement or data, either company corporate action or earnings or economic news like inflation data, and also statement or action of what monetary policy committee anywhere in the world. These are the as for Albert, the fiscal authority, or also the monetary authority. Monetary authority take no decision to drive economic direction where it's going. While the fiscal is more of what of the revenue generation and also implementing of policies with the money generated by the budget for the year. But for any economy to expand, to contract, is the work of what the policy direction of the monetary policy at any given time. That is why any central bank of the world cannot control all the variables like inflation rate, control interest, and at the same time control what control the growth, the output of any economy. It is two of these instruments that we use to control one to picture that their major role of stabilizing price is the work of what of central bank of the world. Anywhere to stabilize what price stability is their key work, and that is why what happened yesterday. As the Fed chairman appeared before the Senate committee to discuss. His disposition was further on how to work further that they're going to continue to hike rate despite the seeming slowdown we've seen inflation because of other economic data. But here, many are looking at the Fed might also plunge the US economy into recession by what? By insisting on what? On rate hike. Because there's already a flash point or a flash light to show that yes, the economy is already moving that direction. Because if for more than almost 6 months or six, we have seen that the business activities in that domain has continued to to contract as a result of what rate hike. Despite this, the kind of how will I say the last slowdown by increasing by 25 basis points. But from the meeting that I had or the appearance before the SEC, that showed that 50% rate hike is underway in the next meeting of Fed, and that also market trying to adjust in that direction. And this also has also strengthen the US dollar. And when there's a kind of higher US dollar or the value increase, it also affects commodity market in terms of what demand. The higher dollar will make you to work people to demand less of the product. That is the thing we're seeing that as the statement was made yesterday or before and after appearing before the Senate, that's broken down that even the commodity market, especially the oil price that have gone as high almost 86 point something dollar, dropped partly to around 83. Lost basic well, lost flat, not basic, flat more 2 point something dollar in a day, and that is the highest since January. I will tell you, you can see the power of statement. You can see that investors are reacting in all facets of the market. Those that are trading the futures, those are trading the FS, those are trading the cryptocurrency, those are trading also the commodity. All these assets are where they move, and because they move, it is the economic disposition or direction of interest that has play over on this. For that, all eyes on this statement, knowing that once there is hike in interest rate, automatically equity market will be shaking, and that's why I see yesterday we saw the market miss even at the earlier market open stronger. But in the afternoon, when we saw a kind of a shift again. But I believe that this morning we are seeing this mixed trend also continuing. And as to speak here, many markets, as I said earlier, are missed in the matured market as a result of what as a result of this outcome of the meeting yesterday. And that also weighed down on different markets of the world because of what? Because of the weight of this statement. Like I tell you that anything that happened in US, because being the like for example the largest economy, anything that happened there with any policy, most time that is what other central bank will also look at. Despite I told you that last week we saw the Bank of Australia Reserve Bank also increasing rate. Bank of EU, the same thing. These are the things that they playing out, in the market as we speak, and that is why investors have to keep their eyes on this, because at any given time, statement from this kind of environment will always influence the decision. That's why I said you must look at the direction of the market, the sentiment behind the market, and how far that sentiment will also last, and that will also give you a direction. Like with this statement now, we can see that the US Treasury bond yield also or have recovered to that 4% again. And when you see yield going up, it has an influence on equity, because many people want to play less risk by looking the way of the treasury bond or treasury bill at this point, because of the yield is becoming attractive, almost 4%. You can see for that in that domain. And these are the things that also putting a pressure on other currency, because this has also moved up for that. Many of these other currency will see that their demand or the purchasing power of their own currency was automatically look the other way, and for that it becomes difficult for them to conclude where they are going from here. I know as the chairman has spoken, consider that market has stumbled since that yesterday, and despite that from room, people were saying that yes, inflation has been despite that inflation has been on the decline already over the last months, series of months. But from the statement, it suggests that the process of beginning to to slow down in rate hike is not on the same, because it's targeting that you have to see this down toward to 2% until before you can think of for that. Even the job data that also comment. These are the things also that is complicating issue in that domain, because when you look at the data coming, look at inflation, see and also look at the purchasing manager. These are the things that are they are using to combine, knowing that for the monetary policy they need to look at all this before they take decision. But I'm looking forward to see that yes, they were already getting to far in the month of March. Let's see how far this is going to play, because the peak of the inflation rate is likely to be, for me, likely to start coming down, because we have seen the peak when they reduced to 25, but now they come down to 25, now going back to 50. That means they are going back. If this continue, I'll tell you that it will confirm really a bad position for the economy of US, because once the economy continue to contrast, automatically you need to go back to policy normalization to bring it up again. But it is earlier, than like who say it's better to do it early than coming at late. Once the whole thing has scattered, it's better watch what are the factors, what are the possibilities that yes, price stability is gradually achieved, and what time are you getting to start reducing the interest rate, so that people can start seeing a direction and start positioning in that space. That is what all eyes are now in that domain. And I'll tell you this that happening in US has also spread to Asia market as to speak. And that is why in that domain too, market as to speak in Europe stock market are also has opened the midweek trading on a lower direction, on a lower southward movement, because of what is happening on Wall Street, no, due to the information that came from the chairman of AFCON with the Senate. I think it's expected to what the rates are going to go in the northward direction. That has also sent a signal. I will say that when US cash sneeze, other central bank, other countries also catch the cold. That's what we are seeing. I can see how this improve backward the the price of oil, despite analysts across the globe are forecasting that because of increasing demand, for oil, that that demand will going to kind of outpace the supply space, and that will also support the price going up. This is at the time where rate hike is also, for me, despite the increasing or recovering data we're seeing that support China economy is on the right path and getting stronger. Because of this the fear of rate hike, want to see how the adjustment in the nearest future. I believe that market know how to digest all this and also so factor it into into their decision. That's why we are looking to see how all this will play out, in all these markets across the globe. But to speak now, European stock markets are what are down at this stage. Germany, is down. That of France also at the same time, and UK, uh, FTE is also down as we speak. For me, let's two words, and most of them are also equally flat. Just to look for information to see where they are going is very, very important. After the news, we saw that the Jones were falling almost nearly 600 basis points. But at this hour now, I can tell you that that market there's little stability at this hour in US market, despite the news and the signal of a higher rate by Fed. We are seeing that market is also flattish there, to speak. We are seeing Dan Jones marginally in green, 0.14, and also S&P 0.19, and Nasdaq is actually Nasdaq is around 0.25. You can see that, but for Asia market also missed direct in that function, but consider that around for China indices there are looking a bit green, but while other in that zone, Asia zone are what are in red, but slightly in red. But if you come to Africa, we're seeing that also the market in Africa is mixed as to speak, while NGS here in Nigeria is in green, as a result of what appreciation in the price of Dangote this morning, which is good and keep the market in that direction. But we'll talk more of the local market later. But on this page, I see that oil price has pulled back. Like I said earlier, to trade around $83.17 at this hour, just because of what? Because of reaction to Fed chairman statement during his appearance before the Senate, U.S. Senate Committee on Banking. And also, don't forget that what is happening in Russia and Ukraine is not also supporting recovery so far, but rather scaring and also giving a lot of concern as the political tension continue to expand, according to what escalate. But I believe that the world leaders at this time should step in, and despite all this going, you can see that they are still discussing how to extend the green deals that has been honored. You can see that's just a human being. What is for one side, there's other side of business. But I believe that if the business side is being considered, they actually go all the way to preach peace to the whole zone, to the whole involved country, the two, so that peace will reign. And because I'll tell you what is happening in Ukraine and Russia is also affecting the global economy today. And even China, I believe that when they say ceasefire, I was thinking that also they go, more step further to encourage other, big names or leaders to come in so they can go and look for peace and discuss this peace with Ukraine and Russia so that they can stop, this fight, and let's see, recovery will start coming back to the two economy. Because I'll tell you, it's not easy for both Ukraine, it's not easy for both Russia. Even the war that is not at, other country that's not at war, we are feeling the impact of this war. For that, I think it's high time, the leaders, the G7 and others weigh in and see that peace reign in that domain, because that is what we want at this time, and that is what we need, so that everything will move inward in that direction. But at the end of the day, it becomes a win-win for everyone that is in the market. That is the way to go as we speak now. Yeah, you are following me. I've discussed investing with what with number before now, but today at this in this class we're looking at investing with what with date. Why I mean investing with date, that we have seen the early flyers releasing their results, and now we are coming closer to what the date of this company. In any investing with number, we talk about the company's numbers, and the one that manage from the exchange, the power of the power of demand and supply, and then not get the right number. But investing with date, you want to look at the date in terms of calendar, and also the date in terms of time. These are the things we also want to look at here. Here we have seen this company release their numbers, and most of them we saw a kind of a mixed number, and some are flat, some are very, very impressive. But also, now that we are coming closer to the corporate action, where the qualification date and what the payment date and the market date is very, very important, because these are another data what that influence prices of stock. You need to know that. Now that the 14th, which is the first market date that will start by next week, is coming from UCA. You can see that UCA price, after pulling back to around 1460, 1440, that's gone back to almost 1495 before premium. You can see the part of using date to invest. That means you must understand why you are there. Like I said, for those that are long-term investors, buy and hold people, they all look at this day. But for we that are also traders that want to look at consistent what we call consistent growth strategies, when you go in and out for one reason or the other, you can see that when the price is towards the markdown, the markdown date operation, you see people want to take advantage of especially the income investor looking at the yield of that position. That price also might also move up again. That means you need to understand all this so that you factor it into what into your decision when you are investing, so that you won't panic out at a huge loss. Also, you panic out when you are also where you want to go your profit. For those that are really want to go out and you see that your fundamental result came, the price pull back, and you can see towards the correction day because you are not interested in the dividend, you can also through that period what also to sell. That's why I say investing with date or trading with date. You need to look at it. But for those that really want to buy for dividend, you want to see the date is that like qualification, even where you are before you can make your fund available because of the yield. You want to just enter that position, qualify that day. Even when they mark down for the other day, you are not interested in the markdown, you move your fund to that. At the end of the day, you are selling to one particular stock where you can recover all the markdown, because I tell you, when you buy at the markdown, it's only part of what they pay you that you will markdown. But if you are in a stock that will also recover quickly and both the markdown part of you gain it back, that is where you are really in profit, because that dividend you have taken become a big profit for you. But there are some strategies to that. So I said you must understand how to invest with number and how to invest with date. But I believe we'll do more of this when we are discussing during the masterclass coming up on the 1st of April. But I'll tell you that history repeats itself, and most of the experts are going to speak that day. They already started looking their data on how to go. You're going to make effective use or take advantage or also opportunity that's been created by what post-election rally, despite the kind of investigation we're seeing, because there is a pattern and consistency is very key. How can we take advantage of post-election rally? Yes, even though we're not seeing rally now, but rally is going to come. When we start seeing changes, we have to check all the history of the past history and see what happened immediately after the presidential election, what happened right after the government election, what happened when the government, it's a new government, coming with policy. We want to look at also from all the manifesto of the political party, which one as the single sector is the incumbent, the president elect is going to work to favor most, and why, and also how this is going to play out going to the future. We want to look at all this so that at the end of the day, it becomes a better deal for you, so that you get what you want from the market. You must understand all this so that you will not miss the opportunity created during a post-election rally, and also expect reform to support the rally in 2024. Because once we are able to have a stable government after all the litigation and peace come fully, and every party accept good, because I tell you, as I speak now, Supreme Court will take the where everything will settle. Once it's able to settle there, it's all what happened last week when it just put an end to issue of naira design and other stuff. Continue, but all this has the way of also influencing foreign investors and others. But we believe that the highest court of the land is the Supreme Court. Once able to take for the presidential election, that also give way for where we are going. But for me, there's no cause for alarm. That is what I will say at this moment. Yes, we want to come back to the market to see what is happening in the market right away. You see that as I speak now, market, I said earlier, market is in green. I think that our market is trading at 55,763.17, and that is about 159.23 basic points up, representing 0.28% in the green, which is good one. But the funny thing that I will tell you that with all this, market is still very, very, the market break is flat. We're having 6 gainers, and also we're seeing also 6 losers in the market. This is what we're seeing in the market now. 6 gainers, 6 losers, and the market is in green. That means we want to look further before the market close. What will be the end of the day? But right now, market is mixed. I would say like, because we are seeing a flat market bread and a green market direction. And I mean that means the general market is in green because of all the life of Dangote cement gaining almost 5 naira at this hour. That's why we are seeing also life of Zenith and Access Bank looking up gradually again in that direction. That is why we are seeing that green. But we want to look at the top gainers and the top losers out of this 6. Which are the top 5 gainers? As we speak now, we start from the losers. We are seeing Chams, Adova, FCMB, UPDC, and Fidelity. These are the top 5 losers as we speak. I will tell you that these losers are purely profit taking. For Adova, I think also the issue of the listing and all, but for FCMB, UPDC, Fidelity, the job profit taking, and I believe they will bounce back. FCMB is been, I will speak now, 4 naira 32 kobo, down just by 2.3%, and the UPDC is also 1 naira 1 kobo, and the Fidelity is been 5 naira 11 kobo as we speak. For the top 5 gainers, you can see that QT is there leading. No, we are followed by NGS Group, and the Unity Bank, Sovereign Trust Insurance, and what, and Dangote, Cement. These are the top 5 gainers. But here for this, we want to look at what is happening in, discuss briefly what is happening in NGS. When we come to the chart, we'll discuss more on that. But let's quickly look at the type in volume. In volume, now we can see that UBA is leading in volume with a 7.6 million share traded so far, followed by Dangote Cement 7 million shares already, 7.1 million shares trading at 285 naira flat. Sterling Bank is also doing 150 kobo, 2.8 million shares traded so far. GT 26 naira 30 kobo, 2.1 million shares, and Senate Bank doing 26 naira 10 kobo at 2.2, also 2 million as we speak at this hour. These are the top trade in the market. Yes, quick one. We'll now go back to the live chart to see what is happening here in the live chart. You can see the market here after start trending for all these days. If you look at where I'm putting my cursor here now, we saw just a green here. After yesterday, the market has been on kind of a missed or saucy movement, from Friday to yesterday. For this one, we're seeing another green again after we saw a flat market yesterday. These are the things we're seeing that this market this week we want to see a mixed market. So far, we can see that mixed trend prevailing. Seeing that the market is also up looking the way of that same 56,000 mark after it had touched almost 55,584.86. Now here already market is being around the 55,762.73. As I said earlier, market is looking up here. But I want to quickly call up our indicators this morning to see if this market up was seen. How indicators are they seeing stronger? Because yesterday we saw a miss technicals. Let's see what is going to tell us this morning. What we're seeing, I'll tell you that the money flow is still looking down. Want to look at our C line. C line said that market is still above the T line, which is good. After testing it yesterday, tested yesterday and went and closed up again. But today now you can see that the market is above the T line. That's the good thing that we need to also consider. Is very, very important. But always check what is your T line doing when you are charting. Also, we go back to see our MACD. What our MACD has it confirmed? That confirmed already. A bearish group. As yesterday we saw that, but this hour is still very flat. But we'll still look at them together in this class. Yes, you can see the T line now where it is. You can see that morning T line, the index action is above the T line. Why money flow is still looking up? So for me, money flow is down to 58.7 or 60, which is close to that. But I still believe that market had the potential also to go up from here. But let's look at let's zoom this to see what is happening here, so that we also get the jigs at the market. You can see yesterday we saw and see I call it a hammer formation. You can see it also looking up here. You can see yesterday, this morning you can see MACD is also here to confirm either a bull or a bearish signal or a bull signal, but still flat now. Volume is relatively small. You can see it here. For me, you can see that the market is above the T line. I mean, the strength is still in the market. It will also watch carefully as we go back to the normal trade. You can see this for the market. Let's look at the 1 hour chart for this market. I told you that anytime you are in the market, you need to look at the different time frame to consider what you are looking at. If you look at the 1 hour chart, the market is still above the T line. You can see it here yourself. You have seen a bigger candlestick here, and money flow just look down to the 58. You can see it looking down. But MACD is trying to go bullish. You can see it here on a 1 hour chart. That's why it's a lagging indicator. You can see that it's also confirming a bullish trend here. You can see from the blue crossing the red one, and you can see where the histogram is telling us once it crosses over to the other side of the chart above it, that is a bullish signal. That means across the signal line already, and this for 1 hour. Quickly, let's look at just check the week chart here before we go on to other stuff. On the week chart, you can also see that the market is still strong, still extending. As we speak now, you can see here, Monday is still bullish, from that space. Yes, like I said, I want to quickly look at what is happening in NGS, and I'll tell you that NGS after 1 year of listing, the result they are posting for me is not adding up. For investors in that position, what is your position? What are you taking? What are you looking at in that space? This is a company that will saw a huge decline in their profit after tax. Even on their bottom line, their top line was flat by just only six basic points as we speak. But we believe that no, for those that are in the premier class, we know what we discussed earlier when it touched 30 naira. I can see since then that pullback. For me, there is nothing you are looking for. Are you an income investor? What is here for income investor? You need to know what to do right away from the stock. As for us seeing that even the technicals are always confirming that what we're seeing is just can see the histogram what is telling you. That means if you're in this stock, nothing stop you to take your profit at this time so that you can move to any other position in the market than keeping your fund here, especially for those income investors. Even for traders, what will put the price for that? Is it the declining earnings that will support the price? But I know yes that this stock are owned by the market traders themselves, the operators, especially stockbroking firm. But if you have the money to put the price up, even not them taking profit at this time, but I believe that you that are therefore profit know exactly what to do at this hour. That's why you can look at we're looking at on this chart on a weekly chart. Let's quickly look at the chart on the daily chart to see what is happening in the stock. Yes, you can see this morning trading above the T line. You can see what has happened here. For me, that we might look at what money flow is trading around 20, 29, 20 just coming up. Yes, we are seeing a sign of MACD coming up. Technical is not too bad, but fundamental, I will tell you, is off it. So that you have to be what? You have to be very careful if you are in this stock. Another stock to watch here is looking at the GT code with the price rebounding to almost 26 naira, 30 kobo this morning. Also look at Zenith Bank. But let's look at this banking stuff because the tier one banks is where all eyes now because of what they are yet to release their results. We want to see the momentum behind this movement for you to know exactly what to do. But here we are seeing that the stock is trying to resist the decline. You can see after coming below the T line, it came up again to trade slightly above the T line now on a day chart for the stock. I'll tell you the money flow is still looking down, and the MACD is not also looking attractive with the formation we're seeing. But that is for a day chart. Let's look at the 1 hour chart. What is the 1 hour chart? It does still trading slightly below the T line, despite crossing the above it to touch 26 naira 50 kobo before coming back again to 26 naira 30 kobo. All eyes are still on this stock. Money flow is looking down, and MACD is also on the 1 hour time looking good. Means you have to keep your finger crossed if you are in this stock. Quick one, look at Zenith Bank, then UBA before we call it a day. Look at Zenith Bank here. Zenith Bank on 1 hour chart, you can see that it's below the T line. You can see even where it is now. You can see, touch as low as 25 naira 90 kobo, all the way back to 26.010 this morning, but around 26.04 now. I see 26.10, 10 kobo and 24. That is where you are moving. And money flow, I will tell you, is down for the Zenith Bank, even around 27. There must be a trigger for this stock to go. Why MACD is already bearish for a day chart. You need to keep your eyes on this stock to see. For those that are income investors, don't need to panic. But let's look at a week chart for this stock. On a week chart, the stock is still very, very strong, but trading above the T line. You can see it here. Money flow is still looking down slightly to 72. MACD is bullish as we speak. But on a daily chart and 1 hour chart, the stock is missed for the stock. Let's quickly look at the UBA again before we call it a day. At United Bank of Africa. On a weekly chart, that will remain above the T line. But money flow is looking down to this 63, and MACD is bullish. But like I said, look at a day chart. to see what the position on this chart. You can see that in the last 2 hours, stock somewhat on a step pressure, staying down, looking down, doing around the 8 naira, 8 naira, no 55, 8 naira 50 kobo as to speak. You can see where it is now. Let's keep out that was what on the 1 hour chart. I'll tell you that the stock is looking not too good. Yes, you can see that it has pulled back to trade below the T line on the 1 hour chart. Money flow really 35 below the 50 basic point, yeah, 50 points, and MACD is already bearish for the stock. And this is how we call it a day today. But finally, before I go out of the space, I want to look at the momentum behind what Dangote Cement. Dangote Cement is what we want to look at. The markdown date is also next week. Let's see what is going to happen. Yes, you can see on the 1 hour chart, the stock is in green. You can see that green stock is almost 82 naira, 289 before pulling back to 285 that was seen recently in the market now. You can see that that sign is not too good sign. But money flow on the 1 hour chart is already around 94 and bullish. If I look at the bullish MACD, you can see a strong bullish MACD here for the stock. Let's go to the day chart to give us more information. The day chart, the stock is what is trading what is on a bullish trend. Look at the stock. Yesterday, it gained no marginally. At this point, you can see that that candlestick is higher on a good volume, and MACD is bullish, and money flow is around what 97. For me, this is strong momentum before the hand top. And I'll tell you that the 20 naira dividend is part of what is supporting it. And I will tell you that this is what I feel that also move the market before the end of before the markdown date. As I said, investing with dates is very, very important. Actually, now we're seeing corporate actions and their dates and also markdown payment and all. Also put it factor into your board decision to know what to do as you are going closer to it, what action to take. You know exactly what it will help you to do when you are taking your investment decision. Yes, on this note, I say thank you. Enjoy the rest of your trading day. Bye.